But besides that, I just want to take you through the compounding calculator. So this is our compounding work. So if we put $100 in and we do 10% a week, okay, so we base this on 2 years. We're just doing 10% a week based on that $100 that we put in our trading account. You click on calculate. And you can see that we've made over $2 million. So we put in $100. First month we made $51, so it's taken us to $151. Okay, then month 2, we just by doing that 10% a week, at the end of month 2 we've made $77, so that's taken us to $228. Month 3 we've made $117 just by doing that 10% a week, so we've taken it to $346. Month 4 we make $500, so we make $177 based on doing 10% of the $346. So we add obviously the $177 to the $346 and we make our $500. So I was just pointing out yesterday that the first 12 months is pretty slow, and then it starts accelerating from month, basically after that first 12 months it really starts to accelerate. So you need a trading plan, and you need to understand how compounding actually works, because without a trading plan, as you know, if you don't plan properly, what's the term again? If you fail to plan, you plan to fail. So basically, if you fail to plan, you plan to fail. That's how it works. If you look at anything in life, any business, any venture, any successful people, business people, or if you look at Elon Musk, if you look at any top sport athletes, all of them have a plan. All of them are disciplined. All of them are focused. But it's all structured around a plan. You know, you need a blueprint if you want to reach anywhere in life. If you want to get to a certain level or get to a destination, you need a plan. You need a roadmap. So obviously a trading plan will obviously revolve around compounding. Well, they both will intermingle with each other. You need to understand compounding, and you need to have a trading plan in order to succeed. Because first of all, it's less stressful. If you have a 10% target or 5% target, you can decide what you want to aim for, whatever your risk tolerance is. You can aim for 20%, you can aim for 15%. But realistically, I mean, I aim for about 10% a week. It is pushing the boundaries a bit, but remember, you also, when your account is smaller and stuff like that, you do want to push the boundaries so you can grow your account as quick as possible. So 10% is fairly realistic per week. You can go less, you can go at 5%, but the lower you go, so if we change this to 5%, we can see at 10% it would have made us 2 million. If we look at 5%, and so if we're doing 5% a week, I mean, you can see the difference. You know, it's $16,000 at the end of 2 years. So I mean, that's pretty slow. So I mean, you want to be. Well, let's look at 7.5%. Okay, that isn't too bad. So realistically, you want to be doing about 10% a week. And that's a fair number to be looking at. So you're literally making about 70 to 80% on your account every month, or literally doubling it every month by doing that 10% a week. So the reason why you want to have a trading plan and understand compounding is banks do it, hedge funds do it, all these big players in the markets do it, because they're not doubling, tripling their accounts every trade or every week. They've got set targets. Obviously, they're not doing 10% a week. They might be doing 2%, 1% a week because their accounts are so big. So you've got to treat trading like a business, have a business model, and understand all these elements. These are actually simple elements, but the biggest reason why most traders fail is because they don't even look at stuff like this. This is actually a big secret in trading that traders don't even look at. They just, even myself, when I first started trading, I just used to be in the markets 24/7, and I thought that's how you got to be, like an algorithm, and you just got to constantly be trading and making pips. First of all, that'll burn you out. That's too stressful. It'll burn you out completely. It did that to me. You'll end up blowing your account. You'll be emotional. You'll be frustrated all the time. So if you follow something like this, it'll make your life a lot less stressful, and it'll make trading more enjoyable and realistic. All you need is discipline, and you need patience. And those two are the biggest two emotions that traders battle with: discipline and patience. Most traders do not have discipline, and they do not have patience, even if they think they do. They just don't have it. It's not ingrained in them, and you've got to ingrain those attributes within yourself in order to succeed at trading. You've got to, because we live in a society where everything is instant gratification, and we get everything now. So you got to change that around when it comes. You can stay that way in your everyday life, but with your trading, you've got to change those habits, those bad habits, and follow a proper trading plan. Also with this, you won't be over leveraging your account. Like the biggest account killer, or the biggest thing that blows your account, is over leveraging. So, you must, obviously, with this trading plan over here, if you're aiming for 10%, you won't be over leveraging your account. You'll still be staying within the parameters of your margin requirements and your leverage. So I'd say for every $100 in your account, you should be using a 0.01 lot size. So once you go over $100, so maybe you have $102, now you start using a 0.02 lot size. As you go over $200, so if you say now you got $205, then you start using a 0.03 lot size. So for every $100 that you go up in your trading account, you increase your lot size by 0.01. So if you're trading $10,000, okay, I'm not sure exactly what that's going to be. That might be like 15 lots or 100 lots. I mean, like 10 lots or something like that. Can't get it off my head, but obviously you need to have a lot size calculator and understand for each level that you go up. According to this, you need to adjust your lot size so that you're not over leveraging, so that you can make this 10% fairly comfortably, and you can do it without over leveraging and putting your account at risk, too much risk. So don't risk more than 2% per trade or 3% per trade. So just stay within those parameters. So you can basically take this and mess around with the numbers. You might, I'd advise any beginner start with even like $50, okay, or even less. Like I remember I took $20 to $1,000 by doing this exact same thing. I was aiming for about 15% a week, so I was a bit more aggressive. But I remember I took $20 to $1,000 by following this. Like that was a couple months after I figured this stuff out, actual compounding. I think I blew about 5 of these $20, and I think it was the 6th or 7th one that I took it from 20, and I just built it up just through the months. I just focused on compounding and learning discipline and patience. Getting those, because I didn't have that. It takes a while to develop that. So just like do what I did. Just start with $20 at a time and just see if you can build that up, and just go. It's like a pyramid. You just got to go up levels. It's like a building. You start at the first floor and you go up to the next floor. You don't take the elevator. You walk up the stairs. Remember, trading is like, it's one step at a time. It's levels. It's one level at a time. If you look at anybody that's successful, they didn't start at the top, they didn't start at the middle, they started right at the bottom. And that's why if you do any, if you study something, if you do a degree or if you do a trade, they start you on the lowest levels. They ingrain certain things in you. They teach you the basics from the beginning. They ingrain good habits in you, train you slowly in the right way, so that your brain and your mind slowly starts adjusting and understanding what you really need to do. And I hope you guys take this into consideration, because I know most traders that are watching this are blowing accounts. That's the hard truth. Most of you guys are just blowing your accounts, like I was, and I've been through that as well. I'm just trying to show you what you can do by following stuff like this and trading like a smart human being. So that's what you need to do. So yeah, guys, I hope you guys got some value out of this, and just please start implementing stuff like this into your trading. Otherwise, you're just going to be wasting your time. You're going to carry on blowing your account, and stick to whatever target you set for yourself. Stick to that target, because if you start, a lot of the time, the reason why I blew a lot of these $20 at first is because I'd make 10%. On Wednesday, I'd be at my 10%, and then on Thursday and Friday, I'd carry on trading, and then I'd go minus 10%, and stuff like that. And when you've reached a point in the week where you've been successful, and now you take a step back and you take a few losses, that messes with your emotions, messes with your psychology, and then you end up revenge trading and forcing trades and just jumping in the market, tripling your lot size, and you end up just blowing, wiping out half your account, if not the whole account. So that's why you need discipline with your targets. Even if the market's slow that week and you can see there's a lot of manipulation in the market, so even if you're sitting on 7% or 8% for the week, just be happy with it. Maybe the next week you'll have a really good week and you'll make 12%, and you'll make up that 2 or 3% that you lost, that you didn't gain the previous week. So yes, guys, I hope you guys enjoyed this, and please like and subscribe, leave some comments, and trade like Einstein. Trade with a plan. Peace out, people.